So we better get straight into it with our stock of the day. And that is Temple & Webster. It has reported annual revenue up 21% to $601 million, fueled by growth in both new and repeat customers. EBITDA reaching $18.8 million. That's a 3% margin that top guidance of 1 to 3%. Net profit climbing $11.3 million, up from a 9.5 last year. And the chief executive, Mark Coulter, saying the market share in furniture, homewares and home improvement sector rose 2.7%, with June checkout revenue up 28%, home improvement sales surging 43%, and the online furniture retailer reporting a cash balance of $144 million with no debt. So, what do our experts think? Mark Moreland, retail in Australia, rate cuts, more to come. Is that good or bad? Is that a tailwind for these retail stocks?
Yeah, a little bit. I think I like retail. We've done very, very well on retail with JB Hi-Fi and Nick Scali and others. Temple & Webster is not one I've ever owned. It's done very well though, and I had a look at their returns over the last 5 years. It's only been listed about 5 years, I think, and it's averaged 28% a year total shareholder return, which is excellent. So you can't complain about that. It's basically the business is very strong. The only things that are a little bit concerning is that the profit margin is quite low. And it's I haven't read the latest numbers from today, but it was 1.2 last year, down from 2 the year before. So it's quite narrow, but it's been growing very strongly. And the only other thing that's a bit concerning from my point of view is the PE ratio, which is in the triple digits, which is hard to square for a retailer, really, because they've got plenty of competition. They're doing it well against the Harvey Normans of the world and Domains and everybody, but they're so it's a quality business. I just think it's pretty exy from a price point of view.
All right, so not interested. Would you hold it though?
No, if I owned it, I'd hold it. I wouldn't sell it. It's good business.
Fair enough.
Yeah. I wish I bought it a few years ago.
Well, yeah.
I've sort of looked at it. We've talked about it on ausbiz lots of times. I just never did it.
Look, you could have bought it back in April. There you go. But that says a lot of stocks, isn't it?
I've had this on the call a number of times, and every single time I think I've said exactly the same thing. I wish I'd bought it. It's always seemed really pricey because it's always had triple-digit forward PEs and things like that. But it's always justified the price. So in the end, so they're growing at. They've got market share of nearly 3% of the furniture market now. The premium valuation is at this point. I really do think. It's the sort of thing that should go on your shopping list if we have a pullback, and I'm fully expecting a pullback over the next couple of months as the economic numbers weaken in the US. So, and this is one that should be really high on your shopping list and just dollar cost average in. If you hold it, definitely don't get out of it. I don't think, because they just keep performing. But I always, for whatever reason, miss those buying opportunities. And I just love their business model, really, and their website's intuitive, easy to use. The delivery's great. The return, we've bought stuff for the office, for our house. They're fantastic, and they're really competitive on price, and kind of like IKEA, everything's flat pack. So basically, they're not paying stupid amounts of rent for showrooms, etc. And their email marketing system is really good. And so I'm going to say hold for now, but high on the shopping list if we do have a pullback, because I think they've got tailwinds, and I think they're a better business than their competitors.
So that's your pick in the retail sector?
That would be yes.
Or JB?
Oh God, no, not JB, no.
No.
Not at the current.
Not at the current price. They're both quality businesses.
But in terms of stocks you're willing to hold,
I would hold this before I hold JB.
I sold my JB.
Yeah.
Okay.
Yep, that's good to know. All right, that is the view on our stock of the day, Temple & Webster.